this pickup may be quite severe, quite sharp. So now, my predictions for 2023, putting it out here so that we can come back to it 1 year from now to see how well we do. So maybe I'm getting a bit confident, hopefully not overconfident, now putting in a lot of predictions. So here we go. I do expect volumes to slow down, okay, in the with all the uncertainties still in play lah. Volumes to slow down. I do expect also a slowdown in property price index increments. So like I said, I don't expect it to drop because with new launches, new benchmark prices being set and volumes being low, it will not cause prices to drop. Additionally, I don't think people will want to sell their prices too low. Again, on a macroeconomic perspective, most people are saying that this may be a short-term recession. No, right? If you really look at the news, yes, there's recession, but nobody is sort of expecting it to be overly long-term. Secondly, also based on the fact that the Singapore property market today is resting on very strong fundamentals, I do not expect prices to adjust downwards significantly or at all, so to speak. Rentals to stabilize, okay, my reasons for this is that there's actually a lot of local rental demand in the market right now while waiting for their units to TOP, and knowing that next year we do have quite a fair number of TOPs. Once those units TOP, that demand from the market over there will be stripped away. Right, it's sort of a double whammy if you can see it this way. We have new supply coming up because those 1,000-unit developments will have a mixture of 1 bedders all the way up to 4-5 bedders. The 4-5 bedders, people mostly own stay. They move in, their previous rental units goes out to the market. Then now we also add in the new supply into the market from the 1 bedders, 2 bedders. So supply into the market next year will come up. Now the question really would be, is the demand sufficient to absorb up this supply lah? So I feel it should work out in hand, and so rentals will stabilize. To be very honest, I don't see how they can continue to increase at the pace that they are currently increasing at lah. But do I expect them to drop again? I feel that one may be a bit hard unless the market vacancy rates shoot up significantly. But based on what I see, stabilize, maybe adjust down a little bit. Different segments wise, maybe the OCR rentals may see a slight dip because a lot of the rentals in the OCR segments are people that used to stay in the OCR, bought a new launch, sold their place, are renting over there. So on that part, they may adjust it down a little bit, but they won't drop significantly. Number one, because owners have to pay high mortgages, and secondly, if they drop enough, the people paying high rentals over in the CCR, RCR will then move out to fill up that spaces lah. So in the absence of people there's a mass exodus of people out from Singapore, I believe the rental market will stabilize.
Hello, sorry to interrupt. We'd like to take the opportunity to thank you for watching the video and also to share why we do what we do. Is to empower consumers with hard facts and figures, quality research and real-life examples to allow them to make the most informed property decisions. So if you found our videos useful, the only thing we ask for is for you to smash that like and subscribe button so that the YouTube algorithm can push out our videos to more consumers. Thank you, and back to the video.
HDB prices to drop, okay? Again, right, unless that 15 months wait out period is lifted. I mean, they say it's temporary, but temporary for how long, nobody knows. If that is not lifted, a good chunk, very naturally, think about it this way, on the demand side, the government is doing all they can to reduce BTO wait times. So that is going to come down next year. And when that comes down next year, demand is stripped out from the market, from the first-time buyers, from the resale market. the demand from private downgraders have already been stripped out. Not many of them want to move into a 4-bedder. They rather buy a slightly larger unit, so they rather hold their private properties that is already fully paid, that's not susceptible to the interest rate increase. So they have all the waiting time in the world. They're just going to wait it out until these measures is lifted. So one of the impacts on the HDB market is really the fact that they said this measure is temporary, so everybody is just waiting and seeing. So the demand in the market, I feel, is dropping. Supply coming up, 15,000 MOP. So if you are a resale HDB owner, that chart that I shared earlier is very relevant to you. If you are a resale HDB owner in Bukit Batok, you better sell quickly and if you want to upgrade, sell quickly and move out of there. HDB prices will drop, pretty sure about that. High take-up, still a high take-up rate in launches, right? Like I said, the market has sort of gotten used or been educated to think that, you know, just buy day one launches, wherever, just pay and you'll be okay. Sort of, I don't know whether brainwash is the right word to use, but yeah, take-up rate for launches will still be high. First and foremost, like I said, right, when I first entered in story time, when I first entered into the industry 10 years, 8 to 9 years back, right? At that point in time, nobody wanted to buy new launches because the data for those new launches were taken from the era of 2013 to 2013 thereabouts, right? Which is why all the new launches weren't really making money. But today, right, any agent will just show you, like, you know what, you see new launches sure make money. You just buy day one, sell, confirm make. But I genuinely just feel that's overly simplistic a way to assume it lah. But that is the way the market works, and so which is why the take-up rates for launches will be high. Popularity in sub-sale, right? That would be a segment in the market that really I feel will move quite well. Number one, people like newer properties. Number two, because a lot of the launches, number one, there's just not that many launches, so even if somebody wants to buy a new launch, may not have the chance to buy a new launch, the sub-sale will be a fallback for them. So it's sort of like a in-between versus people want to buy a new launch and resale, because resale supply so low, owners asking prices very, very high, sub-sale being a place with good supply-demand balance, so I feel prices are more okay to price to move. So once, you know, that market right now is, I feel, still a little bit under the radar, but once it starts to move and people start to know about it, buyers start to tell their friends, hey, you know what, you should check that out, you know, the sub-sale market, not bad, what, you pay like that, you don't pay over the top, next time still got people pay more than you, just come in, buy it, enjoy a new place, spanking new place, and a lot of the TOPs next year will be very, very nice, large developments, fantastic facilities, look very, very grand, so I think sub-sales will be very, very popular moving to the next year. I expect the undersupply to continue for the simple reasons that the ABSD regime is making very hard for somebody to sell their house and replace it with another house if they are investors, right? So the people that really do move are unless they exit the market altogether or they move it because of needs-based, upgrading schools and whatnot. And in the absence of stabilization of interest rates, manpower issues being resolved, developers will still be concerned, and so I don't expect the GLSs to see a huge spike, en blocs to see a huge spike lah. So continue undersupply in the market. So generally, right, still sellers market. Of course, segments-wise, some may turn into buyers market. HDB, I think, will turn into buyers market, but I think private will still be generally sellers market. And lastly, once everything stabilizes, I do expect the market to pick up in the second half of 2023, and this pickup may be quite severe, quite sharp, because of the undersupply and high demand.